As most of us know, investment of black money is quite rampant in the real estate sector. Yesterday, the Supreme Court ruled that the Benami Transaction Prohibition Amendment Act of 2016 cannot be implemented retrospectively, that is before 2016. Now, if you're wondering what Benami transactions are and what this ruling means, we will tell you exactly that. The word Benami in Hindi means without a name. In simple terms, Benami transactions refers to any transactions made by a person without using his name or by using the name of another person. Now, the transaction can be to acquire property of any kind. Now, for various reasons such as tax evasion and making wealth by using black money, these Benami transactions were made to hide the real ownership. Against this backdrop, the Benami Transaction Prohibition Act 1988 came into force and was amended and renamed the Benami Transaction Prohibition Amendment Act 2016. Now, the amended act was known to be much harsher and wider in scope than the original act. Now, the Supreme Court strikes down provisions of Benami Transaction Prohibition Act of 2016, saying that the punishment cannot be applied retrospectively, that is before 2016, and can only be applied prospectively from the day it came into effect in 2016. On another note, Benami properties have also decreased to 154 in fiscal year 22 from 430 in fiscal year 20. Although some offenders may now be able to avoid punishment, we think the court's decision is legally solid and could have opened a Pandora's box otherwise. Also, it is debatable to implement the law retrospectively to punish someone for an action they committed when there was no law in place at the time. Having said that, the Benami Act was introduced to curb black money transaction. However, the fight to curb black money doesn't stop there. More reforms are required to bring in more transparency and openness to the Indian economy. It is given that infrastructure development is fundamental for economic growth of any country. According to a report by Bank of America Securities India, our country is on track to construct more railroads and highways during the decade ending 2025 than it did between 1950 and 2015. Now, going back to our past, our country had only 10,000 kilometers of rail lines in 1950. Now, this rose to 63,000 kilometers in 2015, but it is now expected to touch 1.2 lakh kilometers in 2025. According to the report, the length of the national highways is anticipated to reach 1.8 kilometers by 2025, while the length of all railway lines would be 1.2 lakh kilometers. Now, with India being one of the fastest growing economies in the world, we do lag behind the rest of the world with respect to infrastructure development. However, India is building now. The most recent union budget presented a massive outlay for capital expenditure on key connectivity projects. Capital expenditure was raised by 35.4% for fiscal year 23 to rupees 7.5 lakh crore, while the capex last year was rupees 5.5 lakh crore. Now, according to RBI, the multiplier effect of capital expenditure made by the central government is estimated at 2.45, whereas for state governments, it is around 2. With India aspiring to become a $5 trillion economy, we believe this kind of capex push is a must. The Indian economy is expected to show double-digit growth in the first quarter of the current financial year, according to leading economists. Now, this will be helped by a recovery in contact-intensive services and, of course, a low base. Now, let's understand the preview of Q1 GDP numbers briefly. SBI forecasts India's economy in the first quarter to grow at 15.7%, with a large possibility of an upward bias, while ICRA expects it to spike to a four-quarter high of 13%. While the growth is broad-based, the very high double-digit growth rate is also on the back of a low base. In Q1 fiscal year 22, the economy rose 20.1%, while in Q1 fiscal year 21, it declined 23.9%. However, if the projected growth rates does materialize, there could be an upside to the RBI's GDP growth projections of 7.2% for fiscal year 23 as well. Leading indicators point that the economic recovery in India continues to be on track, with core output, IIP, GST collections all pointing to a positive bounce back. Leading indicators point that the economic recovery in India continues to be on track, with core output, IIP, GST collection all pointing to a positive bounce back. Now, the pickup in government and private capex will also be positive. Inflation too is better managed and is expected to decline further. While we say this, we do face challenges from headwinds like higher than normal inflation, monetary policy tightening, and volatility in commodities. But despite these challenges, the Indian economy is seeing broad-based recovery and is very much on track. So what does these news mean for you? While we believe the Supreme Court ruling is legally sound, the decline in Benami properties is also encouraging and positive. This will have an indirect positive impact on you. With India aspiring to become a $5 trillion economy, infrastructure plays a major role. By boosting infrastructure, there is a multiplier effect on other industries and services and also job creation. This will have an indirect positive impact on you. We can expect Indian economic activity to improve in Q1 and become more broad-based relative to its pre-COVID levels. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.